In chapter 10, we look at performance measurement. So we'll go about it two different ways. One is we'll look at some ratios, which are listed on the screen. And the other way is we'll look at our budget versus actual and see what kind of variances we have. So we'll do that in a separate video. In this one, I'm just going to briefly talk about what are the different ratios that we could look at to measure performance. One is our return on investment. So investment is what are our total assets and what kind of operating income. So this isn't revenue, this is our net income. Will those total assets generate? And that'll be for every dollar that we invest in assets, how many cents or how many dollars will we get back in operating income? The other thing that we can look at is how much profit we make for every dollar sold. So that's just our sales margin. So seeing how profitable our product is compared to the expenses that we have. So operating income, our net income divided by the gross sales will get us to our sales margin. And instead of when we were looking at return on investment, we were looking at operating income divided by total assets. Another wrinkle to this would be our capital turnover, which is just looking at the dollars of sales compared to what we invested in the company. So how much are we turning those out over and generating sales? So total sales divided by total assets, that will be our capital turnover. And the last one is a little bit more complicated, and that's called residual income. So it's looking at what was our upfront, what did we expect to be able to generate out of our total assets? What's our target rate of return as far as what do we expect to have for our operating income generated by our total assets. So there'll be some kind of percentage that would be used here divided by our total assets, and then compare that to what we actually generated in operating income. And anything over what our target was is icing on the cake, and that's referred to as residual income. And then we have a series of 3 problems that go through those calculations. I think they're pretty straightforward. So you have this document available to print out and look at the calculations. But we just talked about the formula. It's just a matter of dropping those in there. Return on investment, sales margins, capital turnover, and then residual income. So we go through a series of calculations there.